Right now, at this very moment, something is happening beneath the surface of global markets that almost nobody is talking about, and it's going to change everything. While everyone's distracted by Bitcoin, gold, and stock market swings, one of the most critical resources on planet Earth is vanishing at a rate that should terrify you. I'm talking about silver, not the silver your grandmother keeps in her china cabinet, not jewelry. I'm talking about the silver that powers your phone, your computer, your car, and virtually every piece of modern technology you touch. And here's the thing that should keep you up at night. We're running out of it. Not in some distant future. Not in 50 years. The crisis is unfolding right now, and when the world finally wakes up to what's happening, the price explosion will be unlike anything we've ever seen in commodity markets. Let me show you exactly why this is inevitable, why it's already too late to stop it, and what it means for your financial future. Before we go any further, understand this. Silver is not just another commodity. It's not like copper or aluminum, where we have substitutes. Silver is irreplaceable in over 10,000 industrial applications. It has the highest electrical conductivity of any element, the highest thermal conductivity, the most reflective. It's antibacterial. It's essential for solar panels, for electric vehicles, for 5G infrastructure, for medical equipment, for water purification. Every smartphone contains between 1/4 and 1/2 gram of silver. Every computer, every tablet, every electric vehicle contains significantly more. The global push toward green energy and electrification isn't just increasing silver demand, it's creating an exponential surge that the mining industry simply cannot match. And here's where it gets absolutely wild. Unlike gold, which is mostly recycled and reused, silver gets consumed. When you use silver in electronics, in solar panels, in industrial applications, it's gone. Dispersed into landfills, into the environment in such tiny quantities that it's economically impossible to recover. We're not just using silver, we're destroying it permanently. Let's talk numbers, because this is where the story gets genuinely frightening. Global silver production peaked years ago. We're mining less silver now than we were 5 years ago, even as demand has skyrocketed. In 2024 alone, the world experienced a silver supply deficit of over 200 million ounces. That means we consumed 200 million more ounces than we produced. Where did that silver come from? Stockpiles, above-ground inventories, the reserves that took decades to accumulate, and those reserves are disappearing fast. Some analysts estimate that at current consumption rates, visible above-ground silver inventories could be completely depleted within 3 to 5 years. Think about that, 3 to 5 years until there's effectively no silver readily available for immediate industrial use. What happens when car manufacturers can't get silver for their electric vehicle components? What happens when solar panel production grinds to a halt? What happens when the electronics industry faces a critical shortage of an absolutely essential element? Prices don't just go up, they explode. Now you might be thinking, why can't we just mine more silver? Great question. Here's the brutal reality. 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. Only about 30% comes from primary silver mines. This means silver production is largely tied to the economics of other metals, not to silver demand itself. When copper prices are low, copper mines slow down and silver production drops as a side effect, even if silver prices are high. The mining industry can't just flip a switch and produce more silver. It takes 7 to 10 years to bring a new mine online from discovery to production. 7 to 10 years. And right now, there aren't enough new silver projects in development to even come close to meeting projected demand. The mathematics here are simple and terrifying. Demand is accelerating, production is stagnant or declining, and there's no cavalry coming to save us. The supply deficit is structural, not temporary. Let's dig deeper into where all this silver is actually going, because this is where you start to see the perfect storm forming. Solar panel manufacturing is consuming silver at a rate that's almost incomprehensible. Each solar panel requires approximately 20 grams of silver. Sounds small, right? But the global solar industry is installing hundreds of millions of panels every single year, and that number is growing exponentially as countries race to meet carbon neutrality goals. In 2023, solar panel production consumed approximately 160 million ounces of silver. By 2030, that number is projected to exceed 300 million ounces annually, just from solar panels alone. Now add electric vehicles. Every electric vehicle requires between 25 and 50 grams of silver, depending on the model. Legacy automakers are pivoting their entire production lines to electric. Countries are banning internal combustion engines. By 2030, electric vehicle production is expected to consume an additional 90 million ounces of silver per year. Then there's 5G infrastructure. Every 5G cell tower requires significantly more silver than previous generation towers. The global rollout of 5G networks is consuming millions of ounces annually, and we're still in the early stages. Medical applications, water purification, RFID chips, semiconductors, the list goes on and on. Every technological advancement, every step toward a greener future, every innovation requires more silver, and we simply don't have it. Here's something most people don't realize. Silver's role in the global economy is completely disproportionate to its market size. The entire global silver market is worth roughly $30 billion. That's tiny. Apple's cash reserves are bigger than the entire silver market. For context, the gold market is worth over $12 trillion. Silver is 400 times smaller. This creates a bizarre and dangerous situation. When major institutional investors, governments, or industrial consumers suddenly need silver, their demand alone can move the market dramatically. We've already seen glimpses of this. In early 2021, retail investors on Reddit's Wall Street bets attempted to squeeze the silver market, and even though they represented a tiny fraction of actual demand, silver prices spiked over 30% in a matter of days. Imagine what happens when actual industrial demand collides with a genuine physical shortage. The price won't just spike, it will go parabolic. Some analysts are predicting silver could reach $100 per ounce within the next 3 years. Others think that's conservative. They're predicting $200, $300, even $500 per ounce if we hit a true supply crisis. And here's the kicker. Even at $500 per ounce, silver would still be undervalued relative to its historical ratio with gold. Let's talk about that gold to silver ratio because it reveals something absolutely stunning about how mispriced silver currently is. Historically, the ratio of gold to silver prices has averaged around 15 to 1, meaning throughout most of human history, 1 ounce of gold was worth about 15 ounces of silver. This ratio was based on the relative abundance of the metals in the Earth's crust, which is approximately 17 to 1. Today, the gold to silver ratio is hovering around 80 to 1. Gold is 80 times more expensive than silver per ounce. This is not normal. This is not sustainable. And it represents one of the most dramatic mispricings in commodity markets today. If silver were to return to its historical ratio with gold, even without gold prices increasing, silver would need to be priced at over $150 per ounce. Right now, as I'm recording this, silver is trading around $25 per ounce. That's a 600% upside just to reach historical norms. But here's what makes this truly explosive. Gold prices are also rising as central banks accumulate gold reserves and investors seek inflation protection. If gold goes to $3,000 per ounce, which many analysts expect, and silver returns to even a 50 to 1 ratio, which is still historically elevated, silver would be at $60 per ounce. And that's before accounting for the industrial supply crisis we've been discussing. Now, let's address the elephant in the room: market manipulation. For years, precious metals investors have alleged that silver prices are being artificially suppressed through futures market manipulation, particularly on the COMEX. While conspiracy theories abound, there have been actual convictions. Major banks have been fined hundreds of millions of dollars for spoofing and manipulating precious metals markets. Whether you believe in widespread manipulation or not, here's what's undeniable. The paper silver market dwarfs the physical silver market by a staggering margin. For every ounce of physical silver that actually exists and is available for delivery, there are dozens, possibly hundreds, of ounces of paper silver traded in futures contracts. This creates a situation where price is being set by paper contracts, not by physical supply and demand. But here's where physics overrides paper. When industrial users need physical silver, they can't accept a futures contract. They need the actual metal. And as physical inventories deplete, the fiction of the paper market will collapse. We're already seeing stress fractures. Premiums for physical silver coins and bars have been elevated for years. Delivery delays are becoming common. Some dealers are struggling to source inventory. These are early warning signs that the paper market is losing its grip on price discovery. When the break happens, when physical demand finally overwhelms the paper manipulation, the price adjustment will be violent and swift. Let's zoom out and look at the bigger macroeconomic picture, because silver's supply crisis isn't happening in isolation. We're living through an era of unprecedented monetary expansion. Since 2020, global central banks have printed more money than in the entire previous decade combined. This has inflated asset prices across the board, from stocks to real estate to cryptocurrencies. But it's also eroding the purchasing power of fiat currencies at an alarming rate. Real inflation, not the sanitized government statistics, is running at levels we haven't seen in 40 years. In this environment, hard assets become increasingly attractive. Gold has already responded, hitting all-time highs. Bitcoin has surged as digital gold. But silver, with its dual nature as both a monetary metal and an industrial commodity, remains dramatically undervalued. Historically, silver has been money for thousands of years. When fiat currencies fail, people turn to gold and silver. We saw this in Weimar Germany. We saw it in Zimbabwe. We saw it in Venezuela. The pattern repeats throughout history. And as confidence in government currencies erodes, as debt levels become unsustainable, as inflation runs hot, precious metals become the ultimate store of value. Silver, being more affordable than gold for average investors, tends to see even more explosive moves during monetary crises. We're not talking about a small correction or a modest rally. We're talking about a potential paradigm shift in how silver is valued. Here's another angle most people miss: geopolitical risk. Silver mining is concentrated in just a few countries. Mexico, China, Peru, and Chile account for over 60% of global production. Any political instability, nationalization of mines, export restrictions, or trade conflicts involving these countries could immediately disrupt global silver supply. We've already seen countries implementing strategic resource protectionism. China has been quietly accumulating silver. Russia has been stockpiling precious metals. As deglobalization accelerates and countries prioritize energy independence and technological sovereignty, silver becomes a strategic resource, not just a commodity. Imagine if China, which produces about 12% of global silver and consumes far more, decided to restrict silver exports to protect its domestic solar and electric vehicle industries. The impact on global markets would be immediate and catastrophic. This isn't far-fetched speculation. We've seen China implement export controls on other critical minerals like rare earth elements. Silver could easily be next. And when that happens, countries without secure silver supplies will be forced to compete aggressively for whatever's available on the open market, driving prices to levels that seem unimaginable today. Let's talk about what this means for the average person, because this isn't just some abstract commodity story. This affects your life directly. If silver prices explode, the cost of electronics will increase. Your next smartphone will be more expensive. Solar panels will be more expensive, potentially slowing the transition to renewable energy. Electric vehicles will be more expensive. Medical devices will be more expensive. This creates an inflation spiral in the exact sectors that are supposed to be driving economic growth and technological progress. But here's the flip side. If you position yourself correctly, this crisis becomes an opportunity. Silver is still cheap, absurdly cheap given what's coming. For the cost of a few nice dinners, you could own multiple ounces of physical silver. If silver goes to $100 per ounce, that's a 400% return from current prices. If it goes to $200, that's an 800% return. Very few investments offer this kind of upside, with such a clear fundamental thesis backing it. This isn't speculation. This isn't gambling on a meme stock. This is recognizing a supply-demand imbalance that is mathematically certain to resolve itself through price appreciation. Now, I know what some of you are thinking. If this is so obvious, why isn't everyone talking about it? Why aren't mainstream financial media covering this story every single day? Great question, and the answer reveals something important about how markets work. First, silver is a relatively small market, and it doesn't generate the fees and commissions that stocks, bonds, and complex financial products generate for Wall Street. There's no incentive for major financial institutions to promote silver to retail investors. Second, the implications of a silver shortage are deeply uncomfortable for policymakers and corporate leaders. Admitting we're running out of a critical industrial metal undermines the narrative of unlimited technological progress and green energy transition. Third, markets can remain irrational far longer than most people expect. Just because something is fundamentally mispriced doesn't mean it corrects immediately. But make no mistake, correction is coming. The laws of supply and demand are iron laws. You cannot consume more of something than you produce indefinitely. Eventually, physics wins. Eventually, price must adjust to clear the market. And when that happens, early movers will be rewarded, and everyone else will be paying whatever price the market demands. Let's examine some historical precedents because silver price explosions aren't theoretical. They've happened before. In 1979 and 1980, silver prices skyrocketed from around $6 per ounce to over $50 per ounce in a matter of months. This was driven by the Hunt brothers attempting to corner the silver market, combined with high inflation and economic uncertainty. Even though the Hunt brothers' corner ultimately failed and prices crashed, the move itself demonstrated how explosive silver can be when supply gets tight and demand surges. More recently, in 2011, silver rallied from around $18 to nearly $50 in just 4 months, driven by concerns about quantitative easing and currency debasement following the 2008 financial crisis. The rally ended not because fundamental demand collapsed, but because of aggressive margin hikes on futures contracts that forced leveraged speculators to liquidate. But here's what makes the current situation different and far more dangerous. Those previous rallies were driven primarily by monetary concerns and speculative positioning. The coming rally will be driven by actual physical shortages. When industrial users can't get the silver they need to manufacture products, they'll pay whatever price is necessary. That creates a price floor that didn't exist in previous rallies. This time, it's not speculation. It's survival for entire industries. Think about the timeline for a moment. We know demand is accelerating exponentially. We know production is flat or declining. We know above-ground inventories are being depleted. The question isn't if there will be a crisis. The question is when. Some analysts believe we're already in the early stages. Premiums on physical silver have been elevated for over 3 years now. Deliveries from COMEX warehouses have been unusually high. Mints around the world have struggled to keep up with demand for silver coins and bars. These are all symptoms of stress in the physical market. But the real crisis will begin when industrial users start competing directly with investors for scarce supply. Imagine Samsung needs 10 million ounces of silver for its smartphone production, but there are only 8 million ounces available. What happens? Samsung pays more, a lot more, and suddenly silver prices aren't being set by futures traders in New York. They're being set by desperate procurement officers in Seoul, Shenzhen, and Silicon Valley who need physical metal or their production lines shut down. That's the moment everything changes, and we're closer to that moment than most people realize. Let's also consider the behavioral aspect of markets because human psychology plays a huge role in price movements. Right now, most investors don't think about silver. It's boring. It's old-fashioned. It doesn't have the sexy appeal of cryptocurrencies or tech stocks. But markets are cyclical, and sentiment shifts dramatically. When silver starts moving, when it breaks through $30, then 40, then 50, suddenly everyone will be paying attention. Financial media will run stories. Social media will amplify the move. FOMO, fear of missing out will kick in. And just like we saw with GameStop, with Bitcoin, with countless other assets, when retail investors pile in, prices go parabolic. The difference with silver is that unlike GameStop, there's a genuine fundamental reason for the move. This isn't a short squeeze or a speculative bubble. This is a structural supply deficit that can only be resolved through higher prices rationing demand. When the mainstream finally catches on, when your neighbor asks you about silver, when CNBC has special segments on the silver crisis, that's when we'll see the truly explosive moves. And by that point, silver will already be 2 or 3 times higher than it is today. Now, let's address some counter-arguments because it's important to consider alternative perspectives. Some people argue that high prices will incentivize new mining production, increasing supply and stabilizing prices. This is true in theory, but the timeline matters enormously. As I mentioned earlier, it takes 7 to 10 years to bring a new mine online. Even if every junior mining company started developing silver projects tomorrow, those projects wouldn't produce meaningful supply until the early 2030s. By then, the crisis will have already played out. Others argue that technology will develop substitutes for silver in key applications. This is possible for some uses, but highly unlikely for most. Silver's unique properties, especially its electrical conductivity, are extremely difficult to replicate. Some industries have tried to develop alternatives for decades without success. And even in cases where substitutes exist, the cost and performance trade-offs often make silver the superior choice. Finally, some argue that economic recession will reduce industrial demand, alleviating the supply deficit. While this might temporarily slow demand growth, it also tends to reduce mining production as metal prices drop, keeping the market tight. Moreover, even in a recession, the long-term trends toward electrification and green energy remain intact, supported by government mandates and subsidies. Here's what really keeps me up at night: the optionality. Silver has asymmetric risk-reward. If I'm wrong, if somehow supply magically increases, or demand collapses, or new substitutes emerge, silver might stay flat or even decline modestly. You might lose 20 or 30% of your investment in a worst-case scenario. But if I'm right, if the supply deficit plays out as the fundamentals suggest, silver could easily increase 5-fold, 10-fold, or more. That's the definition of asymmetric risk-reward. You're risking $1 to potentially make $5 or $10 or $20. Very few investments offer this profile. And unlike speculative tech stocks or cryptocurrencies, silver is a tangible asset with thousands of years of history as money and with critical industrial uses. It's not going to zero. It can't go to zero. There will always be demand for silver. The only question is price. And every indicator, every trend, every data point suggests that price is heading dramatically higher. Let's talk about timing, because that's what everyone wants to know. When will this happen? The honest answer is nobody knows exactly. Markets are complex systems with countless variables, but we can identify catalysts that could trigger the crisis sooner rather than later. A major geopolitical event disrupting supply from key producing countries, a surge in solar panel demand exceeding projections, a financial crisis driving safe haven demand, a default or delivery failure on COMEX silver contracts. Any of these could be the spark. What we do know is that the fundamentals are already in place. The supply deficit exists right now. The inventory drawdown is happening right now. We're not waiting for some future event to create the crisis. The crisis is already unfolding in slow motion. What we're waiting for is recognition. The moment when markets and investors suddenly realize what's happening and adjust prices accordingly. And when that recognition hits, the adjustment will be swift and brutal for anyone caught unprepared. Think about what preparation looks like. For investors, it means allocating a portion of your portfolio to physical silver or silver-related investments. Physical silver coins and bars provide the most direct exposure, though they come with storage considerations and premiums. Silver ETFs offer convenience but carry counterparty risk. Silver mining stocks provide leveraged exposure to silver prices but come with company-specific risks. There's no perfect answer. It depends on your risk tolerance and investment goals. But the key is to act before the crowd. Once the crisis becomes obvious to everyone, prices will have already moved significantly. For industrial users and businesses, it means securing long-term supply contracts now, while silver is still relatively cheap, building inventory, developing contingency plans. For society broadly, it means having honest conversations about resource constraints and the trade-offs involved in our technological ambitions. We can't have unlimited electrification, unlimited solar power, unlimited electronics, and unlimited consumption without acknowledging that key resources are finite. Silver is forcing that conversation, whether we're ready for it or not. Here's the bottom line, and I want to be crystal clear about this. We are heading toward a silver supply crisis that will reshape global commodity markets, impact entire industries, and create enormous wealth transfer from those who ignore the signs to those who recognize them early. This isn't conspiracy theory. This isn't doomsaying. This is mathematics. This is physics. This is supply and demand at its most fundamental level. You can choose to act on this information or ignore it. You can diversify into silver now while it's cheap, or you can wait until the crisis is obvious and pay dramatically higher prices. But you cannot say you weren't warned. The data is clear. The trend is undeniable. The outcome is inevitable. Silver prices will explode. The only question is whether you'll be positioned to benefit from it or whether you'll be among the millions paying whatever price the market demands when the shortage becomes acute. I hope you found this valuable. I hope it opens your eyes to what's coming. And I hope you take action before it's too late. The world is running out of silver. And when that reality finally hits home, everything changes.